The higher your grade, the better it is for investors, the more mistakes you can make. So you can see between fiscal 2012 and 2014, the tonnage is the blue line. They were up, our grades were down. That was a function of management focus was diverted for various reasons. So in 2014, at the bottom there, where we were at the bottom of our head grade count, the CEO came back into the fold, cleaned out management, was vindicated in the marketplace, and started to push the head grade back up. Without good head grade, you're going to struggle. You see in fiscal 2016 and about Q2 there, the CEO implemented a thing called an enterprise blog. It is a social media platform that he created himself, which allows all the information in the mine to flow freely and transparently so that all mine managers can see what's going on in the mine at the same time. So you can see when he implemented that, the grade went from 246 up to 310. And that over a very short period of time. He maintained that basically at 300 grams per ton over the last 4 to 5 quarters, and now we're out telling the story. Consolidated net profit per ton, we think, is actually a better measure of how a silver company, or actually any mining company, is doing. You can see that our revenue per ton, the blue line, is trending up. The metal silver price, the realized silver price, has gone down, but our net profit stayed the same or went up while the metal price goes down. That's a function of what I just showed you, which is head grade. So if grade is up, but metal prices are down, you can still make money. People often ask me what's going to happen to the silver price. I don't know, but I do know this. If you have good grade, you can weather the price when it goes down. I can tell you how low the silver price has been. I can't tell you how far it's going to go. But if you have grade, you can weather anything, and you can actually make money. And we are about making money. I did talk about the enterprise blog. It is again a social media system that allows us to push up all information from the mine site and let it go transparently across the corporation, so I can see in Vancouver what someone's doing at stope number 275 at the Ying district at any time. Here's an example. We have contract miners. This is narrow vein mining that we have, so it's the width of the tables in front of you. It's very important that you minimize dilution. And if you add any more rock to the end of that table and you take it with you and push it through the system, it winds up costing us money. So a contract worker who's going to take down that vein, you can see it's very clearly demarked up top. He takes that picture, he paints the binder, he takes the picture, shows where he's going to blast, sends that picture up to the blog. The manager, who could be anywhere in the world, sees it, says, yes, that's fine, go ahead. So that minimizes our dilution. On the lower right, that picture is about CO. So it's carbon monoxide. You have to take measurements of carbon monoxide all the time, especially after blasting, and that gets lifted up to the enterprise blog as well. The safety people in China love this because they now have a record of our safety record of CO and other safety regulations, and so they are actually looking at Silvercorp and saying other companies should be using this kind of technology. The Ying district is our primary district, our primary production area. 224 games in this district, 68 square kilometers of land. We've produced 50 million ounces of silver over a 10-year period. We now have 20 years left with a new resource we just put out. We have 2 mills that do 3,200 tons a day in combination. We produce a silver lead concentrate and a zinc concentrate, and we have 6 smelters in the area, which I talked about. They actually pay upfront because they're vying for this concentrate because it's so clean. There's no deleterious materials in it. There's no antimony, there's no arsenic. So they use the high-grade concentrate that we produce to blend with others. So that's why they pay in advance for it. Our Guangdong, the GC mine in Guangdong, we just put into production a few years ago. It is a silver zinc mine. Its grades are lower than the Ying, but it is a profitable mine and adds about 10% to our bottom line. The BYP is a gold mine. We suspended operations on that. We're looking for a gold license. We have to go back to the government to get a gold license, so it's not operating at this time. We might sell it. We have strategic alternatives for it. Over our lifetime, we produced, as I said, more than 51.1 million ounces of silver. Thank you, Kathy. The estimate for next year is that we do about 6 million ounces a year. Last year we did 6.5 million ounces. We expect to do about 6 million ounces of silver next year combined with BGC and Ying. Our lead zinc production, we produced over 750 million pounds of lead and zinc, and next year we expect to produce about 80 million pounds of lead and zinc. And the lead and zinc price, which has gone up recently, has helped us quite a bit. As I said, our cash costs are negative because of the lead and zinc prices have increased over the last 6 to 9 months. Our reserves and resources, as I said, we've mined over the last 10 years, and we've replaced that ore with 180 million ounces in measured and indicated, and 115 million ounces of reserves. Our production guidance next year, we're looking at 681 million tons next year. Head grades we're looking at for the Ying district is 300 grams per ton. We want to keep that grade at 300 grams per ton. If we keep that grade at 300 grams per ton and have anywhere between $15 to $17 an ounce in silver, we should be able to make between $30 and $50 million a year in profits. So that's our goal. Production guidance again for this year is 900 million tons, 275 grams per ton for silver, and 5.3 for the Ying district. Capital expenditures next year should be $21 million as opposed to $31 million that we had for last year. So our free cash flow should be in the order of about $30 million. And that's my talk, and I thank you very much.